Why are billionaires buying REITs now? What do they know that we don't? You know when you're in a room and suddenly the smartest, richest, and most informed people in the room all start looking in the same direction. They don't say anything, but they start walking together. And you think, wait, what's going on over there? This is exactly what is happening right now in the investment world. Giants like Warren Buffett, the greatest investor in history, and Michael Burry, the man who predicted the 2008 financial crisis, as well as leaders at Blackstone and Brookfield, are doing exactly the same thing, investing heavily in REITs, real estate investment funds. And when people who could invest in absolutely anything, gold, startups, hot stocks, cryptocurrencies, yachts, choose to put billions into a single asset class, you need to stop and take notice. They are seeing something that most people haven't seen yet. And here's the most important thing. You can also invest in this. You don't need to be a millionaire. You don't need to have an apartment in New York. You don't need to have a Harvard degree. The game has changed. REITs are becoming one of the most accessible and smart ways to invest in real estate, and the world's biggest players are making their moves now. So the question is no longer, what are REITs? The question is, why are so many powerful people buying this now? And are you ready to do the same? So, what are REITs? And why is everyone talking about them now? If you've ever thought about investing in real estate, buying an apartment, a house to rent, maybe a warehouse, but quickly gave up because you thought, it's too expensive, it's too much work, what if the tenant doesn't pay? Then pay attention, because the REITs may be exactly what you were looking for without knowing it. REITs, real estate investment trusts, are companies that invest in real estate, like shopping malls, hospitals, office buildings, apartments, logistics warehouses, and even forests. The difference is that instead of buying an entire building, you buy a small piece of it, in the form of shares. It's as if, instead of buying a pizzeria, you bought a slice of that pizzeria. And the best part, this slice pays you a portion of the profits every month, without you having to cook, serve customers, or wash dishes. In the case of REITs, the professionals take care of the properties, contracts, and tenants. You just invest and receive the results. And what's more, by law, these companies are required to distribute at least 90% of the profit that they receive from rents directly to investors. This means that unlike many stocks that pay little or no dividends, REITs usually pay recurring income, often monthly. It's like receiving rent, but without having to own the property. And you can buy all of this on the stock exchange with just a few clicks right from your phone. So, now that you know what REITs are, you can understand why billionaires are betting on them. They're not just buying real estate, they're buying cash flow, stability, and most importantly, time. And now, you can too. REITs pay well, much better than you might think. Now that you understand that REITs are like slices of real estate that you can buy on the stock exchange, here comes the part that really catches your eye, the money they give you back. While many stocks out there pay small dividends, sometimes so small they barely cover the cost of a cup of coffee a month, REITs play in a different league. Here's a straight number. It's common to see REITs paying 4%, 5%, sometimes even more per year, only in dividends. And there are some that pay every month, as if they were an extra salary, but coming from the rents that these properties generate. Want a simple example? Imagine you invest $1,000 in a REIT that pays 5% annually. That's $50 per year, but divided into monthly payments, that's more than $4 per month. And the more you invest, the more this cash flow grows. And even better, it's money that comes in even when the market is turbulent, as long as the REIT continues to perform well. It's like owning multiple rental properties, but without the hassle. No plumbing repairs, no noisy neighbors, no chasing down delinquent tenants. All you have to do is watch the money drip into your account, and that's exactly income predictability that makes REITs so attractive. They're not just investments, they're cash flow generators, and when the world is unstable, like now, having a reliable source of income can make all the difference. This is what billionaires are seeing, a solid, accessible and scalable source of passive income. And you can see it too. Investing in real estate without having to buy a property? Yes, it's possible. If someone said to you, you can own part of a hospital, a Manhattan office building, or a giant Amazon fulfillment center, and still get paid for it every month, would you believe it? It may even seem like something out of a movie, or something for very rich people, but that's exactly what REITs allow. And for anyone with a brokerage account and a few dollars to invest, the great magic of REITs is this: you invest in real estate with all the solidity and security that this offers, but without having to buy an entire property, without getting financing, without dealing with deeds, renovations, property tax, or headaches. Want another easy-to-imagine example? It's like moving into a luxury condominium, only instead of paying rent, you receive. And the icing on the cake, all of this is done the same way you would buy a share of Apple or McDonald's with one click. REITs are traded on stock exchanges like any public company. This means you can buy, sell, or increase your position with full liquidity, without having to go through the long process of buying or selling real estate in the physical world. Imagine having access to the global real estate world, with all the infrastructure, contracts, and tenants, without ever needing to visit a property. You share in the profits, but leave the hard work to those who understand the subject. That's why, for many people, REITs are the smarter way to invest in real estate in the 21st century. Even Warren Buffett got in on the action, and that says a lot. Now pay attention, because this is strong. Warren Buffett, the most respected investor on the planet, known for being cautious, demanding, and extremely selective about where he puts his money, decided to invest in REITs, and he was never a fan of this type of asset. For decades, he avoided it, even when everyone said it was promising. But in 2017, he made a surprising move. He bought 377 million in shares of Store Capital, a REIT specializing in commercial real estate. And it wasn't a small investment. He bought nearly 10% of the company. Now, sincere question: what would make someone like Buffett change his mind? The answer is simple yet powerful: dividends and real value. Buffett loves companies that generate consistent profits and that know what they're doing. He likes businesses that stand the test of time, that have a moat, as he puts it, something that protects them from competition. And Store Capital, with its properties leased to solid companies, did just that. Furthermore, Store paid robust and consistent dividends, something Buffett himself has always valued. It's estimated that over 90% of the shares he holds in Berkshire Hathaway now pay dividends. In other words, he fully understands the power of passive income accumulated over time. If even the world's largest investor saw value in REITs, even after years of ignoring the sector, perhaps this is the clearest sign yet that it's worth paying attention to now. It's not about copying what he does. It's about understanding why did he do, because when a genius changes his mind, it's probably worth listening to. Dividends, the silent secret behind lasting wealth. Many people enter the stock market looking for the next rocket ship, that stock that will go up 1,000%. But the world's wisest investors, like Warren Buffett, know something that many only discover years later. The real power is in dividends, especially when they are consistent and reinvested. Buffett doesn't just invest in companies that grow, he invests in companies that pay and continue to pay year after year. This creates a snowball effect. The money that comes in is reinvested, buying more shares, which generate more dividends, which buy even more shares, and the cycle repeats. Over time, this builds into an ever-increasing income, without you having to do anything other than maintain your position. Now, here's the key point. REITs are dividend specialists. They exist by law to distribute almost all profits to investors. This makes the payments high and regular, often more stable than those of traditional companies. And what does that mean for you? This means that when you invest in REITs, you're not just betting on growth. You're building a continuous income stream, which can be used to reinvest, supplement your income, or even accelerate your financial independence. It's like planting a tree that starts small, but every month bears a little fruit, and the more you care for it, the more it grows. Over time, it becomes an orchard. And that's why Buffett, even though he's not a dividend hunter, values this type of asset so highly. Because he knows, in the long-term game, the winner is not the one who runs the fastest, but the one who always knows how to reap. Michael Burry, the man who bet against the system, now bets on real assets. If you watch the movie The Big Short, you might remember an eccentric character in a band t-shirt who immersed himself in spreadsheets until he realized the US housing market was about to explode. That character is based on Michael Burry, a true investment genius, and one of the few who profited while the whole world lost in 2008. Now, here's what catches your eye. This same guy who became world-renowned for betting against the traditional real estate market returned to investing in real estate, but in a different way, through real assets with tangible value. He recently made a heavy bet on GEO Group, a former REIT that operates private prisons in the US. Controversial, yes, but the point here isn't the morality of investing, it's the pattern behind his choice. In addition to GEO, Burry also invested in telecommunications infrastructure and agricultural land. What do all these assets have in common? They are real, physical, essential, things that continue to exist even if the financial market collapses. Unlike tech stocks that can evaporate overnight, real assets have intrinsic value. A land remains a land, a warehouse remains standing. A fiber optic cable continues to transmit internet. Burry isn't just looking for profit, he's looking for resilience, and REITs are part of this. They are a way to invest in real estate and infrastructure that are more resilient to crises, because they are backed by the physical world, not just projections. When someone who profited from betting on the collapse is now betting on real assets, maybe it's time to think like him. Maybe it's time to bring concrete into your wallet. Why are real assets so valuable? Just imagine, you have a gold coin, a piece of land, or a building. Even if the financial market goes crazy, these things do not completely lose their value because they are tangible. You can touch them, use them, or sell them. Real assets, such as real estate, land, infrastructure, and even gold, are different from stocks or financial securities. Stocks represent pieces of companies which can go bankrupt, close, and become worthless. But a building or a farm, they remain there with their own value. This makes real assets a kind of anchor for your money, especially in difficult times when everything seems unstable. If a company goes bankrupt, your investment can turn to dust. If you own a property, it continues to exist and generate value. That's why many experienced investors like Michael Burry prefer to have a portion of their portfolio in real assets because they are safer when economic storms hit. Furthermore, these assets often protect against inflation, which is when money loses value over time. As real estate and land prices tend to rise, your investment keeps pace with rising costs, preventing your money from shrinking. In other words, having real assets in your portfolio is like having a shield against market uncertainties. REITs shine when inflation rises. Why this matters to you? You know, when the price of things starts to rise and your money seems worth less. That's inflation, a challenge everyone faces at some point. What's amazing about REITs is that they often perform better than most investments when inflation is high. Why? Because the properties these funds own can increase rents over time, keeping pace with or even exceeding inflation. This means the dividend income you receive tends to grow, helping your money maintain its value. And that's not all. Historically, during periods of moderate to high inflation, REITs tend to outperform the S&P 500 index, one of the biggest barometers of the stock market. So if you're worried about inflation eating away at your purchasing power, REITs can be a good hedge because they provide growing income and exposure to assets that appreciate over time. In short, REITs are like a financial shield that helps keep your money safe and working for you, even when prices rise. Billionaires in charge. What Blackstone and Brookfield are doing with REITs. When we talk about the world's greatest real estate experts, two names always come up. Stephen Schwarzman, CEO of Blackstone, and Bruce Flatt, CEO of Brookfield Asset Management. These guys don't mess around. They manage hundreds of billions of dollars in assets, and they know exactly where to invest. Today, they are focused on REITs because they see a large discount on the price of these shares. That is, they are buying real estate and properties at a lower price than their real value. For example, Brookfield has bought huge stakes in REITs in the UK and Europe, taking advantage of a fearful investor sell-off. Blackstone has acquired several REITs in the United States, including student housing, apartments and business parks, sectors that tend to be stable and generate reliable income. What does this tell us? That these giants are seeing unmissable opportunities to grow their wealth safely, and that perhaps you should take a look at these opportunities too. When the world's biggest investors bet on something, it's worth at least understanding why. REITs with a solid track record, dividends that grow steadily month after month. When we think about investing, one of the best things is knowing we'll receive a steady income. That feeling of having money coming in every month, you know? That's exactly what some REITs offer, and in a way that impresses even the most experienced investors. Let's talk about the realty income, for example, which is affectionately called the monthly dividend company. For over 60 years, it has been paying dividends every month without failing once. And most impressively, over the past 25 years, it has increased these payments every year. Consider this. While many companies cut dividends during a downturn or simply pay them occasionally, realty income maintains this consistency and even increases the value paid to shareholders. This is a sign of a solid business with competent management and a property base that generates consistent income. Another example that deserves to be highlighted is the W.P. Carey. It's a little younger, but with nearly 25 consecutive years of dividend increases, it shows that consistent growth isn't a fluke, but rather the result of a well-thought-out and sustainable strategy. These REITs, with strong track records, are called dividend aristocrats, a title given to companies that manage to maintain this continuous growth for decades. For investors, this is practically a guarantee of stability, especially if you're looking to build passive income for the future. What's more, these dividends aren't just money falling from the sky. They come from property rentals, long-term contracts, and businesses that generate a steady cash flow, even in difficult economic times. So when you put your money into REITs like this, you're betting on companies that have a resilient business model and that ensure their shareholders always receive their return, month after month, year after year. It's like planting a tree that bears fruit every year and grows a little more each season. Therefore, if you're looking for security and stable growth, looking at these REITs with a proven track record may be one of the best decisions to protect and grow your assets in the long term. Why everyone should consider REITs in their portfolio. The affordable investment that can transform your future. Have you ever considered investing in real estate, but were daunted by all the bureaucracy, the money required, and the work involved in maintaining a property? Buying houses, stores, or buildings can be complicated and time-consuming and costly. That's where REITs come in. Real estate investment trusts that act as a gateway to the world of real estate, only much simpler and more accessible. Instead of buying an entire building, you can buy a share of it, just like buying a share on the stock market. Why is this so important? First, because REITs provide access to a huge market that previously seemed distant to most people. For just a few dollars, you can own your own piece of shopping malls, hospitals, office buildings, logistics warehouses, and even farmland. Furthermore, REITs pay regular dividends, which means you receive passive income, money flowing into your account without having to sell your shares or do anything active all the time. This is ideal for those who want to build financial security and freedom, whether it's to pay bills, invest in dreams, or prepare for retirement. Another fundamental point is the protection against inflation. Unlike other stocks that can plummet when prices rise, REITs tend to follow rising rents and property values. In other words, they help preserve the value of your money, preventing inflation from eroding your assets. And there's more. Investing in REITs means diversification. Ever heard the saying, "Don't put all your eggs in one basket"? That's exactly it. Having a diversified portfolio helps reduce risk, because even if one sector does poorly, others can compensate. REITs add a layer of security and stability to your portfolio, balancing the volatility of the traditional stock market. It's no wonder that major investors and billionaires like Warren Buffett, Michael Burry, Stephen Schwartzman, and Bruce Flatt are investing heavily in REITs. They know that, in times of economic uncertainty, investing in real assets with a solid track record of dividends and appreciation is a smart and efficient strategy. For those just starting out or looking to take a step forward in their financial life, REITs are an affordable option that combines profitability, security, and simplicity. But of course, no investment is magic. It's important to do your own research, understand where you're putting your money, and be patient enough to let the results show over the long term. Ultimately, REITs are an opportunity for you to have more control over your financial future with an investment that combines the best of the real estate market with the practicality of the stock market.